Hi, welcome to daytradetowin.com. Today we're going to continue where we left off in the last episode. I showed you how the markets are manipulated to break a support line, to have you scared out of your position, how the market then immediately reverses, starts a new trend in the opposite direction. In other words, the direction that you and many other traders thought that the market would go, but everybody got scared out of their positions when the market broke the support line. This is what Wyckoff traders would call a spring. The market is squeezed together like a spring, and then when the tension is released, the market shoots right up just like a spring would do. I've heard some pretty experienced price action day traders say that trading these springs is one of the best ways to trade the markets using price action only. And I definitely agree. And if you look at the chart, I guess you can see why. After the market has broken through the support, it usually moves up explosively, and the trader who bought down here makes a lot of money in no time. Unfortunately, it's very difficult to trade these setups live because it goes against everything you have learned about the markets and what's supposed to happen when the market breaks a support line. You will definitely think that the market will move down. So it also goes against your emotions, beliefs, and rationale. So my suggestion for how you can approach this instead is to let the spring and the subsequent market action play itself out. Let the market break the low, let it reverse and start moving upwards. Don't rush into things, wait for the pullback. That's when you should enter your position. If the pullback holds above the previous low, the spring, then it will be a great time to enter your position. If the pullback is on lower volume and smaller candles than the up move, just like we discussed previously, then that's a very good indication that the line of least resistance is up and you can go long. So let the market break the low, wait for it to move upwards, wait for the next pullback and enter your position. You can also have the opposite situation for a short trade. Wait for the market to break the high. That's what we call an up thrust. Let it reverse and start moving downwards. Wait for the bear rally on lower volume, smaller candles, and then enter your trade. The bear rally should not reach as far down as the initial up thrust. So that's it. That's a good price action day trading strategy. It's difficult to trade the spring or the up thrust, but if you wait for the first move and the pullback, then it becomes much easier to trade this. And hey, just a few more days and the mentorship program will start. If you're serious about becoming a day trader, go to daytradetowin.com and sign up for the 8-week mentorship program, where you'll learn great day trading strategies and you'll be coached by a pro trader. Get your free day trading simulator and a live real-time data feed for practicing at daytradetowin.com. Until next time, good trading.